One of the biggest challenges that many of my clients have is, how could I finance my projects? They don't pay me for 30 days or 45 days or 60 days or even 90 days. How can I grow my business when I have all this money on the street? And I have a solution for you. So I've actually been researching and figuring out ways for a lot of my clients, because this is like the biggest issue that I think 99.9% of contractors have is financing their projects. And in this video, I'm gonna show you 15 tips and strategies where you're gonna be able to either get money from somewhere or have better terms in your contract so that they're financing it. So let's go. Number one, use the SBA. So the United States has a division, a department called the Small Business Administration. And the purpose of this organization is to help small businesses. So if you do a Google search like SBA credit lines, it's gonna take you to a page. You'll see a search result that says lender match. You can actually put your information there, sign up, and they're gonna link you with lenders that can give you a credit line. Because what you wanna do is you wanna find a bank or a lender that can give you a line of credit that's gonna be able to finance your materials, finance your labor, and finance your business operations. Number two, get a line of credit from a local bank. Now, this strategy is right out of the playbook of real estate. So what do these guys do? A lot of these real estate people, these billionaire guys, right? They go to the bank, they put a down payment of 10% or 20%, and they use the bank's money to finance their properties. And then they get cash flow, and then they renovate it, and then they flip it, and then get more money, and then more money, right? So we're gonna do the same thing. We're not gonna finance our own jobs. We're gonna let the bank finance them. So you gotta go to like the small local banks, not the big, huge chains. You wanna go with the small ones. And what you want is you wanna get like $50,000 or $100,000. You don't need like millions of dollars yet. You just need a little bit to start. And it helps when you have your profit and loss statements, when you have your signed contracts, right? They're gonna ask for all this stuff. They're gonna wanna see your IRS transcripts. And if you have good credit, you're likely gonna get approved like that, right? So the first route I go is the SBA, like I said, number one, but the second route is use a line of credit from a local bank, right? You're gonna use this to finance your labor. And in a second, I'm gonna show you how to finance your materials. Number three, get a line of credit from American Express Blueprint or Bluevine or do a Google search to find other lenders. So over the past, 5 or 10 years, there have been all these private online banks that have been popping up. They're actually really good. American Express Blueprint, we have that. Bluevine, one of my colleagues, he uses that one for his credit line. And some of these, they're gonna have higher percentage for interest rates, but it doesn't matter because all we gotta do is get started. When you start getting work, right? You start getting contracts, right? Then you can actually go to the bank or go to the SBA and get approved for more. So very important that you have good credit. Fix your freaking credit. You need to be in the 700s or in the mid 700s if you want to get favorable terms for all this stuff. Number four, get terms with your suppliers. The suppliers that you buy from, they have credit applications. They're called credit terms, and they have terms like net 30, net 60, 60-day next, 30-day next. And what that basically means is you're gonna have 60 days, 30 days, 45 days, 90 days. There's one that I found online called build.com, BILLD.com. I've never used them before. I'm not sponsored by them, but I saw that they have 120-day terms, which is really good because that's 4 months? You have 4 months to pay the bill. That gives you way more than enough time than you need. So these suppliers are gonna give you terms based on how much you buy from them, your credit score, and things like that. And what you want to do is, the trick is, you're going to use over here your line of credit to finance your labor, and then you're going to use your credit terms with your suppliers to finance the materials. So very important that you don't use your line of credit to finance the materials unless you absolutely have to, because then you're going to use up your line of credit real quick. Number five, open up a business credit card. Now, if all else fails, go open up a business credit card. At a minimum, they're going to give you $5,000-$10,000 that you can start using for small purchases. Number six, get a home equity line of credit on your house, only to be used for signed contracts. Now, here's my disclaimer. I would never ever want you to mortgage your house to be able to do business. However, if you have signed contracts and you feel comfortable, the last resort is using your house equity, okay? This is a very powerful strategy. They use it in real estate. You can use it in business. You're gonna pull money out of your house. What they typically do is, if you've owned your house for a bunch of years and you've paid off your loan, right, your mortgage, they'll come in and they appraise your house, and they'll typically give you 80% loan to value. So if your house has appreciated, $200,000 and you have a gap, they'll loan you a percentage. So you can probably get a couple $100,000 from your house. And it's basically a credit card. It's a line of credit on your house. You use it, you pay it. You use it, you pay it. Number seven, negotiate terms with your client. Now listen, in commercial construction, everything is negotiable. All right, I've seen clients that they've been able to negotiate really, really good terms, deposits up front. They've been able to get joint checks. They've been able to do a lot of cool stuff, creative things, just to get the money going, right? One of my clients out of LA, the other day I was talking to him and he tells me, hey, listen, I got a job. I'm having a little bit of a cash flow issue because a lot of my money's tied up on this job because it's pay when paid and it's been 2 months or 3 months. I'm waiting for some checks. But the owner tells me that he wants me to do 4 more. What do? Do I just turn him down? And I go, no. Tell him that you need a deposit or that you need to get paid weekly, or figure out some creative terms with him. What happens is the owner wants him to do these 4 other restaurants and he really, really wants to use him. So when that happens, that's really good because you can come and say, listen, I'm a small company. I can't finance all this stuff. If you can give me a deposit, I can start. If you can pay my materials, I can start. If you can pay me every 2 weeks, at least for the first 2 or 3 months, I can start. But I can't finance all 4 jobs at the same time. Negotiate these terms. You're gonna be surprised that a lot of times they're gonna be happy to help you. So what do you think about that so far? How are you getting your projects paid for? Are you guys doing cash? Are you guys getting lines of credit, loans? What are you doing? Put in the comments below and let me know what you think. Number 8, come up with a creative deal with your client in exchange to get paid weekly or bi-weekly. So like, this is kind of like a continuation of number 7. Everything's negotiable. So one of the things that I've seen really work effectively is use the price to negotiate the terms. So a lot of times you might say, listen, I know we're agreeing on this price or we're very close to agreeing. However, I'm a small business. I need to have better cash flow. Can you help me out? Oh no, it's pay when paid. Well, listen, what if? I know it's pay when paid. What if I do it for this much, but you pay me every 2 weeks? They might say, so I can make an extra couple $1,000 or $20,000 or whatever it is if I do it like this. Done deal. And they might give you better terms. Number 9, offer to do the labor and have your client purchase materials directly. So we've gone through all these strategies for you to finance it, but at a minimum, sometimes it doesn't work. And you can offer to your client, hey, listen, you can get a major cost savings if you just hire me for the labor, but you buy the materials directly because I don't need to mark it up. I'll still give you the list. I'll still prepare the purchase orders, but you go and you pay them directly, and then you pay me for my labor only. And that will remove a lot of liability on your part. And the owner might say, this guy's actually trying to work with me. This is a win-win scenario. Number 10, find subcontractors that will agree to do 30-day terms. So for example, a lot of your subs, they're established companies. They have good cash flow. You may not have good cash flow. You might be a drywall contractor struggling or new, or you're getting new into the business, or maybe you're a GC that you self-perform a lot, but your subs might be in a great financial scenario. So you might call up your guys and be like, hey, can we do this on a pay when paid terms? And they might say, yeah, sure. And if you can negotiate that, your problems go away almost overnight. Now, if you're a GC, all of your subcontractors should be companies that are doing pay when paid, right? The good thing about being a GC is you don't need that much money up front. You can start bidding jobs and running them without having to have a lot of money up front. When you're a sub, you have to finance the jobs and you have to use all these creative strategies. All right, so if you're liking this video so far and you think it's valuable, click the little like button and subscribe so that you can get notified of all our future videos. Number 11, front load your schedule of values. By the way, front loading in construction is like a bad word. It's like the F word in construction. So in your schedule of values, you have to break up, and I have a really good video on schedule of values that I'm gonna put it here in the link above. But what a schedule of values is you're gonna break down all of your proposal costs, right? This is what I'm gonna bill for demo, for framing, for drywall hanging, for drywall finish, for paint, for this, for that, right? You're gonna itemize it. That number doesn't have to be super exact. All you need is to get close, right? And then what you're gonna do is you're gonna front load. So you're gonna take the stuff that's towards the back of the contract, the acoustical ceilings, the painting, right? You're gonna move them towards the front of the contract. You're gonna move that money. In order for the GCs not to throw a red flag, you can only move like 20% of the money. More than that, you're running the risk that they might notice, oh man, we're paying too much money up front. That's not cool. But you're not gonna tell them what the percentages are. You're just gonna say, hey, I'm billing like this, boom. And you're gonna put money in the front, because what happens is, if they're gonna make you wait 45 days after the end of the month to pay you, then you're gonna get a lot of money, as much as possible, in that first check. I used to get like 50 or 60% of the money by the time we were done with the framing scope, because I would put 10% mobilization, and then I would put like 50% of the money in the framing item, and then I would spread the rest out between the drywall hanging and the finish and the acoustical ceilings and all that stuff. So you could do that. I never really got called out. So we would get, by the time first or the second month of the job was over, that we were done with the framing, I was already billing 100%, and I was getting like more than half of the money of the job. Number 12, separate your materials inside of your schedule of values and try to receive the materials by the last day of the month. Like for example, if it's the 30th of the month, we want to order our materials, our purchase order, and we want it delivered at least towards the end of the month or by the last day of the month, because your supplier is not going to charge you that invoice for another 30 or 45 days. So what happens is, if you separate in your schedule of values, this is my labor for my drywall, and this is my material for my drywall, this is my labor for my framing, this is my material for my framing, and you separate it. Like let's say you get a big drywall order, right? You can bill 100% of that order in this billing, because it landed on the job site. It was delivered on the job site before the end of the month, so it applies for this billing cycle. So you can submit that. That's a quick way to really use the dates in your favor. Number 13, be aggressive with your schedule of values. So the last 3 have been about schedule of values, and this one specifically is about being very aggressive. What happens is on the job, when you break out your numbers, let's say you call your superintendent, he says, hey, we're 30% done with our framing. You're not gonna bill for 30, you're gonna bill for 50%, right? And you're gonna submit that. The only way for your client to challenge you is if they go to the job site and they grab a tape or they grab the wheel and they go and start measuring how much you framed. Same thing with the drywall. Hey, if you're at 25% of your drywall hung, you're gonna bill for 40% or 50%. They're gonna literally have to measure how many square feet and how many boards you put up in order to approve, to verify that. The worst thing that will happen is 9 times out of 10, they're gonna just be like, all right, approved. But the 1% of the time, or the small percentage that there's an owner's rep and somebody that has all the time in the world, right? They're gonna come back and be like, well, you're really not 40% complete. Please revise your schedule of values to 30%. Well, if it's 30%, you're still higher than what you were normally gonna bill for, right? So be aggressive with your schedule of values. Number 14, use change orders rather than time and material tickets. Let me tell you why. When you're in the middle of a project and something comes up that requires an additional change, additional work, these guys are gonna push to get you going. They're like, no, we'll just sign the tickets and we'll get you paid fast. But they never pay fast. So what you wanna do is you wanna get a change order, a signed change order, because if you complete 50% of the work this month, you could already be billing for 50% of this work. But what happens with T&M is you're gonna submit your ticket, your daily tickets. But let's say that task is not complete. Let's say there's an owner change and the directive is reframe a bunch of drywall and hang a bunch of more drywall, and that's technically the change order, right? If you're not done with that scope, they're gonna be like, oh, just submit your T&M tickets with a formal change order, a potential change order when you're done with it. Guess what? That might carry on for 3 months. So you're gonna be doing a lot of work for free without getting paid until forever later. And guess what happens at the end of every job? They're gonna submit it. It's not a priority because the work was already performed, and you're gonna have a lot of money, more money that you're paying. Remember, you're paying for these materials. It's gonna linger, and then at the end of the job, they're gonna come back and say, hey Daniel, listen, I know that you submitted this and we don't have that much in the budget, the owner's over budget, like let's negotiate this price. I know you submitted $50,000 in change orders, but can we do like 25? And guess what? You're gonna eat that. But if you come in with your change order up front, you're basically approving, getting them to sign, you're forcing them. Basically, in professional terms and legal terms, there's usually a clause in the contract that says you can't stop the work because of a payment discrepancy or something like that. Whenever you use this tactic, what you're gonna do is you're gonna say, hey, here's my change order, please sign so we can proceed. Oh no, we can't sign it until the owner approves it. And then I'm gonna say, well, I can't proceed until you approve it. Oh no, look, according to the contract, you can't stop work because of a change order. I'm like, nope. That says I can't stop work because of a payment discrepancy. You're asking me to do something extra, therefore you're holding up the job, not me. Sign my change order. Boom. And what you want is you want to be able to bill that month for that work. And last but not least, number 15, start your job at the end of the month whenever possible. So like the best thing you can do is if you could start your job and get materials ordered towards the end of the month and start the work like on the 20th or the late 20th of the month, what's going to happen is you can bill super aggressively that month for the materials that you ordered and the work performed, so that by the time you get paid, you're kind of skipping 30 days of waiting, right? Because if it's like the 25th of the month and you place your big fat drywall order or your big fat paint order or whatever it is, you can bill 100% of your materials, boom, right there. And that's like 50% of the job sometimes. So that's the way to do the financing. All right, so if you're here now, that means you're serious about growing your business. And I wanna give you the opportunity to join our movement. So we have our 8-figure contractor program where we're literally taking clients from being residential guys or small commercial guys, or maybe guys that are starting out, and we're taking them to become $10 million a year contractors. Now, it sounds crazy, but construction is one of those industries where if you do it right, and if you get coached, and if you get guided, you could really blow your company up. You could really get a lot of business very quickly. So if you want me to coach you, if you want my team to help you, train you on leads, train you on estimating, train you on all that stuff, I'm gonna put a link right here in the description, and I'm gonna put it in the description below where you can join our 8-figure contractor program where we're taking contractors to $10 million a year. And the goal is to do it in 5 years. So if you wanna join the movement, if you wanna see your business transformed in the next 5 years, click below and let's go and let's do it. If not, go ahead and enjoy this next video.